So let's talk about managing risks. Let's talk about taxes and scams. So remember, initially I told you that investment comes with risks. There is no investment that is without risks. But we must learn how to manage these risks so that we get the best out of our investment. Okay, so one of the risks, like I mentioned, is that there's a possibility that the company that you are investing in do not do well. And so in order to, you know, limit this risk, what you want to do is you want to make sure that your analysis is done effectively. Do your analysis for yourself and don't just wake up one morning and decide to say, okay, I want to buy these shares. Or if you have a financial advisor, this person can help also to, give you financial advice. But what you must do is that you must analyze each company before you buy. That would help you to reduce the risk. Okay. Now, for taxes, your investment income is always taxed. 10% withholding tax. But if you use a good platform, a good broker, all of this will be handled for you. Okay. And finally, about scam. We are living in a world where there are scammers everywhere actually. They are trying to get the best out of you by deceiving you. All right? Now there is one golden rule that you must keep in mind in a bit to avoid this scam. Do not, and again, do not invest with a platform that is not licensed by the Securities and Exchange Commission. I talked about them when I was talking about the stock exchange market, right? I told you that they are the ones that are in charge of regulating what happens in the stock exchange market. And so you would want to verify if this company, if this platform, if this broker that I'm about to, open accounts with them, if they are licensed by the Securities and Exchange Commission. And if they are not, it is wise that you don't put your money there. Because we have many platforms that come up to say this and that, and they offer high profit. That is to attract people and all. So please, what you want to do is you have to look out for this. And another thing that you must do to reduce your risk is you want to have diversification effectively in your buying of your shares. You want to have a diversified portfolio. I'll explain what that means. Let's say, for instance, you want to buy many companies, many Nigerian companies, and okay, you are looking at MTN, Airtel, Glo, and all of those things are in one sector of the economy, the telecommunication sector. Or probably you want to buy shares and all you are thinking of is Zenith, you are thinking of GTB, you are thinking of FCMB, you are thinking of Sterling. All is in one aspect, which is the banking sector. So what you want to do is you want to spread your wings across different sectors of the economy. Have a stock in the banking sector, pick another stock in the telecommunication, pick another one in the agriculture, pick another one in the manufacturing sector. Just spread it that way. The reason is because I told you that there are many things that affect stock price, okay? And one of it is the economy, right? So the policies also can also affect the stock prices. So when you have diversified portfolio, when one aspect of the economy is not doing well, you won't be at a loss because you have other shares in different other sector of the economy. That is how a wise investor will think. So these are the things that you must do to ensure that you limit the risks, you avoid scam, and you have more return for your investment.